Okay, awesome. Really excited to have everyone here to listen to Sam Burson, principal at the Awesome Fund Energy Impact Partners. Uh, just a quick bit of housekeeping before we start. In the chat section, please tell us who you are, where you're from, what you're working on, what you think of the session. We love to see as much activity as possible. And then in the Q&A section, write any questions you have relevant to the topic. And anyone participating should be able to upvote any questions they think are really interesting, and we will aim to answer them based on priority. And with that, I'm going to let Sam take us away. Thank you, Sam.
Awesome. Thanks, you. Hi, everybody. My name is Sam Burson. I'm a principal at EIP. I focus on our Frontier Fund. I've been with EIP for almost 8 years, joining the firm as an associate soon after we launched. I've been able to see the firm grow from 3 strategic LPs with about 150 million in AUM to where we are today, 65 strategic LPs, nearly 3 billion in assets under management. And what makes EIP unique is our LP base, which includes 65 strategic partners across the energy supply chain. That includes utilities, oil and gas companies, both upstream and midstream, real estate companies, tech companies, and industrials. And we built out an internal infrastructure to support the commercial and strategic relationships across our ecosystem of, like I said, 65 strategic LPs and 100 plus portfolio companies. Around a third, don't quote me on that, of our team is dedicated to this effort. And over the last 7.5, 8 years, we've seen about just north of $2 billion in bookings across our ecosystem, over 400 contracts signed between our LPs and our portfolio companies. So big emphasis on engaging with our strategic LPs and supporting our portfolio companies drive commercialization. Today, we're investing out of 5 different strategies, all focused across climate, decarbonization, and the energy transition. Our longest running strategy is our flagship fund that focuses on commercial or very near commercial opportunities with minimal technology risk, often investing in software and services businesses. We have a European fund that mimics the flagship strategy, but based in Europe with team members in London and Cologne. I focus on our Frontier Fund, which I can touch on in a little bit more detail here, but we focus on 2 main pillars of our investment strategy: revolutionary technology, so often first of a kind, lab scale, demonstration scale, pilot scale, generally pre-commercial, generally hardware. And the second chunk of that mandate is a material impact on decarbonization. We have an Elevate focused fund that is backing diverse and underrepresented founders. And we also have a credit fund that focuses on small and medium-sized US businesses. One of the things that we think is pretty unique to our Frontier Fund, where I spend most of my time now, is a dedicated in-house technical expertise. So we have 2 PhDs on staff, think ex-ARPA-E, who have a career in evaluating technologies, technology scale-up risk, and techno-economics. That's a core part of our diligence strategy and our diligence process, and something that we track over time with our portfolio companies. The Frontier Fund in general invests, initial checks anywhere in kind of the $5 to $15 million range. We, across EIP, we like to lead transactions. We take board seats, but we're happy to partner with other investors, whether that's a co-lead, whether that's a follow, depending on the situation. And I think that covers kind of the intro here, and kind of where EIP sits and how we invest. Generally investing anywhere, across our various strategies from seed stage all the way through a traditional growth equity, pre-IPO, traditional private equity buyouts on the other end. And I'll start answering questions. I'll answer Arthur's first. Yes, the Frontier Fund itself, that is a global strategy that will invest globally in Europe, in North America, and beyond. Got it. Could you describe your due diligence process before and after term sheet? So we try to front load as much of our diligence as possible pre-term sheet. That generally includes commercial diligence, market diligence, technology due diligence, all of the, what I would call kind of standard processes in the diligence process. Post diligence, it's often IP diligence, engaging with legal counsel, engaging with any third-party advisors that we need to, and where we might be spending our own money to due diligence at that stage. Got it. How many seed stage companies do you fund as compared to growth stage funds? We probably lean towards kind of Series A, Series B, and beyond into growth. We do have several examples of seed stage companies that we have backed, but our sweet spot is probably in kind of that Series A, Series B, at least for the frontier strategy. Okay. Bear with me as I go through these questions. Does the frontier or any other funds invest in mobility and EV? Absolutely. Probably more of a fit for our flagship strategy, kind of given the maturity of that market. We've invested in Flow, the Canadian company, out of our flagship strategy. For the frontier fund, as it relates to mobility, we would probably look to other transportation markets for decarbonization. Think shipping or air travel as compared to EVs. A question: what do you think about non-dilutive instruments such as venture debt to finance climate tech startups, particularly ones developing hardware? Most of our companies seek venture debt and or equipment financing, so definitely supportive of non-dilutive sources, whether that's from grants or whether that's from venture debt or equipment financing. It's hard to build hard tech, and it costs a lot of money. So any sources of capital that makes sense, we think we should pursue. Question from Bert Baker: at what point do you match a startup with your strategic? So it's part of our diligence process and also part of our kind of post-investment process with the company. So prior to an investment, we are often bringing prospective portfolio companies in front of a group of our LPs through a few different pathways. One is something that we call either a council day or a council call. Each of our strategic LPs has anywhere from 1 to 3 dedicated staff members that we call ambassadors, whose role is to interface with EIP. So that is often people from corporate strategy, from corporate development, from innovation, potentially from the finance groups, who kind of own that relationship with the IP. And prior to investment, we're often bringing those companies in front of the LPs and getting their views, trying to understand if they think they can work with that company, because that will influence potentially our investment decision. Our LPs do not sit on our ICs, but we take their views on the market, on the technologies to heart. And then post-investment, obviously we basically go to work for our portfolio companies, supporting BD or strategic innovation as much as possible. Okay. Let's see. Cameron Gold, could you provide some commentary on your outlook for the climate VC space in Q4 and into H1 2024? Good question. Wish I had a crystal ball. I can share what we've seen maybe over the last 6 to 12 months and kind of so maybe a quick look back instead of a quick look forward, but seeing kind of the mega deals, the $75 to $100 million Series B, Series C deals, especially for hard tech pre-commercial companies, definitely taking longer to get done, finding it more difficult to find a lead, a lot of follower interest, but waiting for a term sheet from a lead is definitely more pronounced now than it has been historically. And then even at kind of the Series A stage, where a lot of companies had focused on raising a $20 to $25 million Series A, seeing a lot of pullback in those strategies, finding alternative sources of capital like venture debt, like equipment financing, like a customer funded initial pilot to kind of bridge the gap between the that $20 to $25 million target and where we're seeing those rounds shake out in more of like the $15 million range. Sarah, what's your typical check size, and would you invest in TRL 5 or 6? For the Frontier Fund, typical check size is in the $5 to $15 million range, with our sweet spot, 8 to 10, I would say. Obviously, we're reserving a bunch of capital for follow-on investments, because out of the Frontier Fund, we think any successful company will need to raise a lot of capital. And TRL 5 or 6, yes, definitely within our sweet spot. Let's see. A question from Dave Palm. Hi, Sam. How do you think about bankability when it comes to evaluating a next technology? Yeah, bankability is absolutely critical. I mean, there's been a bunch of articles over the last year about kind of the valley of death in the climate hard tech space between early stage venture and mature infrastructure. And that's definitely a piece that is challenging to fill. And it has to be filled by either large grant funding, a very bullish VC community, an aggressive infrastructure investor who's willing to take on that first of a kind technology risk, or potentially customers who are willing to take some of that first of a kind risk on balance sheet. It's definitely something we think about. There's no one answer to it, but you have to be creative, and you need a management team that is creative to fill in that that valley of death in terms of first of a kind funding. So speaking to our teammates who have expertise in project finance to understand how a project or how a technology gets to bankability is critical for our process. And part of our technical due diligence process on the Frontier Fund is understanding when we think technology is mature enough for infrastructure capital. Let's see here. Best way to engage with me, this one got a thumbs up, via email. Always kind of the best pathway is through a mutual connection, right? I'm guessing it's the same for founders who are reaching out to venture funds. Mutual connections through portfolio companies, through investors is always the best way to start, but cold emails also work as well. And this follows up with where does your best quality deal flow come from? Definitely from referrals from portfolio companies, from management teams that we've backed, or from co-investors who we've partnered with in the past. That's where the best deal flow comes from, but we see deal flow from advisors or bankers, from cold outreach, from engagement at conferences, at events, or through our own direct market research. The investment teams at EIP work very closely with our strategic team who engage with our LPs to do deep market research, and we share that information and those research reports with our LPs. But the combination of the investment team, due diligence, and kind of our strategic research function, evaluating markets and landscapes, creates an opportunity for us to do really good direct outreach on our behalf, on our ourselves. Let's see. A question that kind of follows on to what I just talked about. What is the relationship structure between the research and investor teams internally? And do you think EIP is a leader in that capacity? What advantages does that provide? So the structure is, like I said, about a third of our team, right, is dedicated to supporting the commercial and strategic relationships. That team is also responsible for proprietary research that EIP does on a range of different topics of interest to our LP base. And that helps us engage with our LPs, share the research that we think is most topical, but it also helps influence our investment decisions. So often the investment teams and the research teams are working hand in hand on live opportunities and to do market landscapes. I do think that gives us a unique advantage, especially as it relates to engaging with our LP base. Yeah, I think our unique research and investment team and how we work together really drives value both for our portfolio companies and for our customers, our LPs. Let's see. How likely does deal flow sharing happen among co-investors? Does that lead to competitive environment? Short answer is yes and yes. It's a tight-knit community in the climate space. We are co-investors with a bunch of partners who at times are competition for deals, but often partners for deals. So it definitely is a balance between partnering and competing for opportunities. But it's healthy competition, and the best referrals, like I said, come from co-investors that you build relationships from. So it's both. Okay. With regards to the Frontier Fund, what kind of companies have you most excited? So from a sectoral perspective, we're investing in anything that has a material impact on decarbonization. So whether that's zero carbon energy production, to energy storage, to clean hydrogen and clean fuels, to CCUS, spending a lot of time on industrial decarbonization, spending a lot of time in the broader metals, minerals, materials space. Part of the energy transition is a shift from extracting fossil fuels to extracting metals and materials for electrification. So have spent time in that sector and have made a few investments in the broader materials space. And then, like I touched on kind of earlier in our discussion, EVs are a bit mature for us out of the Frontier Fund, but transportation decarbonization, whether that's aviation or shipping, is definitely of keen interest to us. Okay. If I'm missing any questions, I apologize. There are a lot. What's the best way to reach out to your team if we don't have a warm intro? Cold emails work. We read them. I would probably, maybe highlight a recent article that you've seen about EIP or one of our fundings, and how that relates to you, and and why that spiked your interest in engaging with EIP. Are you currently planning to leverage your flagship fund to support ventures graduating from the Frontier Fund into growth? So we have not done it yet, but definitely a possibility, right? We can support companies from seed stage all the way through IPO and beyond. So definitely an opportunity for companies that have de-risked their technologies and are beginning to scale up commercially to, like you said, graduate from the Frontier Fund and into our flagship strategy. What are your thoughts on revenue-based financing? Does it raise questions if it's part of the capital stack? I don't have any gut reactions to that, to be honest. For a lot of our Frontier Fund investments were pre-commercial at this stage, so limited revenue. to even support revenue-based financing, but no red flags from my perspective on that. Okay, you're gonna scroll up to the top. How is EIP prioritizing the circular economy and eliminating plastic as part of the carbon budget? Great question. We have not made any investments in the broader plastic space in terms of circularity. One of our investments is Cyclic Materials that is focused on circularity as it relates to rare earth elements. But in terms of plastics, it's definitely something that we're open to and would be eager to invest in. Thinking through kind of the decarbonization impact of the plastics ecosystem is, we spent a little bit of time there, but have not made an investment in the broader plastic space, but would be eager to look at interesting opportunities. Do you plan to publish the research reports elaborated with your LPs? I think we do publish a few of them online on our website, but part of the value that our LPs get for investing in us is access to our research and access to our researchers, which is probably more important than our actual research. So we publish some stuff online. My colleague Andy Lubershane has a Medium where he posts things that he's thinking about. It's great to read. So he brings, he takes a lot of the stuff that we work on internally, and he has a Medium that he posts too. So I recommend looking up Andy Lubershane's Medium for some of EIP's thoughts, though I think he categorizes it as his thoughts. Okay. What's more important, how fast a startup achieves 1 million in revenue, or how quickly a startup goes from 1 million to 10 million? In the frontier world, I think it's the latter. Often we're seeing early stage pilots, or but how a company gets to commercial scale in the frontier fund is critical. Let's see here. Do you only focus on deep tech? What about business model innovation? Out of our frontier strategy, it's primarily investing in revolutionary technologies. Our flagship strategy would probably look at business model innovation. There could be overlap across the different strategies, but generally the frontier fund is focused on what we call revolutionary technologies. So that's more of a deep tech focus, but there could be overlap between business model innovation and deep tech as well, and we're open to that. So from an anonymous, what has the 14-year fund life at EIP enabled that otherwise wouldn't have been possible? So our frontier fund has a 15-year fund life compared to what might be more standard, and what our flagship fund is set up as a 10-year fund life. So with these revolutionary technologies, we expect longer timelines to de-risk, and longer timelines to commercialize. And we want to make sure that we are aligned with the management companies, the founders, and our co-investors as it relates to a potential exit. So having an extended fund life allows us to align with the natural scale up of the technologies that we're backing, and does not force us to make any, potential decisions to exit earlier than might be optimal. So that is unique about our Frontier Fund. Longer Life Fund allows us to account for the risk in technology scale up and commercialization. Do you invest in circularity in terms of solar panels? Familiar with a few companies, or at least one company in this space. We have not made an investment in solar panel recycling. That does not mean we're not open to it. Definitely fits our mandate and would fit our strategy. How many of your strategics are infrastructure companies? So our strategics range from electric and natural gas utilities, oil and gas upstream, oil and gas midstream, real estate companies, let's see, the hyperscalers, and industrial parties. A few infrastructure or investment firms that have infrastructure strategies have also invested in EIP. So I don't know if that answers that question specifically, but that's kind of the broader group of our infrastructure investors, or our strategic investors. Do you invest in the agri-tech space? What do you think are the most promising areas for impact in this sector? We have been spending time thinking about ammonia, potentially modular ammonia, green ammonia, as both agri-tech, but potentially a shipping fuel or a power generation fuel. So that's probably where I've spent time in the broader agri-tech space most recently. So I think that answers that question. Clean cooling technologies pique your interest? Yes, absolutely. Heating and cooling requires a lot of energy. As the world develops and as developing markets become more developed, they will need more heat, but often more AC. So definitely a space where we have keen interest. What is the most revolutionary concept you invested in? What revolutionary tech would you like to see? So we have invested in one fusion company that's probably the extreme of our risk profile. So that's probably the most revolutionary if and when that company can be successful. And waste management tech potentially depends on the space, depends on what type of waste. I've spent time looking at companies in the manure management space. So if that's the waste that you're thinking about, potentially. But the short answer is anything that touches climate, decarbonization, and the energy transition is where we like to invest.
Just coming into our final minute. Sam, it's been awesome.
And I see Hugh coming online. Is that time for me, Hugh?
We've got 1 more minute left. Perhaps if you could maybe answer one question. It's been an awesome session, and then I think we're on time to wrap things up.
I cannot hear you if it is.
We're just coming up to 1 minute left now. I'm wondering if you can hear me.
Okay. I don't know if I've lost audio, but I think got it. Okay. I may have lost audio. Thank you, Hakeem. Is your team looking into renewable infra automation? Yes, some colleagues have been looking at renewable automation as it relates to solar, but yes, definitely something we are interested in. And I think my time is up now. But thank you, everybody, for your time. Great. And I just dropped my email address in the chat. Thank you.